One of my favorite sayings in the world of investing is when in doubt, zoom out. And in today's video, this is exactly what we're going to be doing. We're going to be diving deep into multiple macro and short-term charts, justifying why the markets are overwhelmingly bullish, the key levels that you need to be paying attention to on the macro and short term, and exactly what to expect next. Let's go ahead and jump in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are going to be taking a look at Bitcoin from a macro and a short-term perspective, discussing the current bull market, upcoming altcoin season, the total cryptocurrency market cap, and of course, the short-term price action. We're going to be going into extensive structural and technical detail today. By the end of the video, you'll have a detailed and well-rounded understanding of not only what is happening, but what is expected next. So before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, join us over on VIP. We post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, and exclusive analysis. Not only will you get access to all of our trading setups, you'll get access to our group chats, our general chat, trading chart and education chat, news, help, daily video, and of course everything else we have to offer. If you're interested in joining over 600 members, contact me in the pinned comment of the free channel. For more information, you can go ahead and click these links. Let's go ahead and dive on in. So like we said guys, in today's video we are doing a comprehensive analysis looking at our weekly macro charts from a technical and a structural perspective, as we do have a 3-point verification method that we have seen applied in prior cycles popping up in this cycle again. As of right now, history is repeating itself, and that has led to a parabolic season for both Bitcoin and for altcoins alike. We're going to be taking a look at the total cryptocurrency market cap, discussing a critical level of support we are currently holding on to. We're going to be taking a look at Bitcoin dominance, the altcoin market cap very briefly, and of course the current short-term price action for Bitcoin. Moving over to the market data to start with, looking at 24-hour volume, we are down 36%, sitting at 134 billion. 24-hour liquidations are down 66%, sitting at 121 million. Of the 121 million, 60 million have come from long positions and 61 million have come from short positions, indicating the last 24 hours of price action has been very much up and down. If we do take a look at the last 24 hours, we can see a whole bunch of short-term chop developing within this range between 59 to 57,000. We'll come back and discuss what is happening in more detail later in the video. Moving over to the broader markets, the DXY has taken a little bit of a nosedive, as we have been expecting. Again, we've been saying we are expecting a retracement to retest this uptrending diagonal support line. If, again, we fail to break over this neckline of resistance, this 106.5 level was, of course, the bullish trigger, meaning a break over 106.5 would result in a continuation upwards. As you can see, we actually failed to break above that level, thus resulting in a correction as we are now retesting that uptrend. If we do take a look at the momentum, bring up our RSI indicator, we can see that the RSI flipped positive quite some time ago. Again, indicating a negative momentum shift occurred, which increased the likelihood of a retest of our uptrend and an eventual breakdown. A breakdown of this level, which is currently very likely, is going to be bullish for the stock market and for Bitcoin, which could push these assets up. Moving over to the broader markets, briefly, we can see on the weekly chart with 21 hours remaining, the S&P 500 has managed to remain above 5,000 for the week as of right now, and we are pushing over 5,100. Again, guys, this 5,000 level is a macro trigger point. Below here, we enter a macro downtrend. We are bearish, okay, we're looking for our 2021 high, but above here, like we've been saying all year, we are expecting macro continuations upwards, and we are still macro bullish. The exactly the same thing goes for the Dow Jones over here. Below this 37.7 region, we are macro bearish, looking for corrections to 2021 high. Above 37.7 to 38, we are macro bullish, and this is a major continuation upwards point, a major area of high time frame support. So the markets are still bullish. We have suffered a pretty large correction, but these corrections resulted in retests of major support levels, and these support levels have not broken. And that is the key concept that we'll be discussing in most of today's video. It's a concept that you'll find popping up throughout most markets right now. Although we've seen these large corrections, our high time frame structural supports have remained intact. And no matter how much the price action moves down or up, if we do not break below resistance, or should I say support, and break above resistance, we're just simply ranging. So let's go ahead now and jump over to Bitcoin. Before we do, a quick word from today's video sponsors. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, BitGet and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the BitGet link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, BitGet and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and jump in. And a lot of you are probably wondering or been anticipating this video, as we didn't do a video yesterday as per our weekly schedule. We were actually away yesterday, but we're back into it today, and a lot has happened since our last video. Of course, we saw a correction underneath that major $60,000 region, and we told you guys that a loss of $60,000 would result in a continuation lower, and our first initial target was going to be that $57,000 to $58,000 region as per our VRPV. We can see we had a VRPV gap, which took us from around 61 to 52, with our first peak at around 57, which is our critical area of high time frame support. This still remains as an area of high time frame support, and we have now retested that level, which again is going to act as a potential reversal point. The big question is, will the price action reverse from this point strong enough to eradicate the weakness that has been developing, or is this just a small bounce before a continuation lower? So we're going to answer that in the short-term analysis today, but we also want to talk about a major uptrending support level we can see that spans back since October 2023, the 16th, 17th of October to be precise. This, of course, is a major uptrend that we are still traveling above. This is going to represent our yearly uptrend, okay? Our yearly uptrend has not yet been retested, and technically, guys, while we remain in this yearly uptrend, the price action is still going to be macro bullish. We are still expecting continuations upwards. The yearly uptrend, as we can see, got retested on the 16th, again on the 24th of January, and you can see we have not yet retested this area for a third time. If we were to retest it for a third time, this would line up to around 55 to 56,000. Now, I do want you to remember that number, 55 to 56, as it is actually a very important number on the macro weekly charts when we look at our technical indicators later. We have a high time frame confluence with that level. So 55, 56. If we eliminate everything on the chart and just focus on this trend line, this again is a trajectory, a representation of the trajectory of price action over a course of about 8 months. And this again is established or represents our yearly uptrend. So provided we remain above this level, we are expecting continuations upwards. If we do break below this level, that is now when we expect a continuation to our next area of support. Again, as per the VRPR gap over here, we can see the VRPR significantly drops off from around 56.5 down to 52. So we're looking for that extended correction a lot of people are waiting for, right? We need to see a loss of our local low, okay, at around 56.5, and most importantly, we need to break down below this yearly uptrend. A loss of that yearly uptrend and a loss of that local low will result in a volatile move back down to 52,000. Until then, we are approaching support, and this short-term correction has the potential to flip bullish again. So that's it for the higher time frame on this chart. Let's get into the nitty-gritty on the short term and discuss exactly what we expect next and the key levels you need to be paying attention to over the coming week. So obviously guys, we are in a short-term downtrend. The short-term downtrend is represented by this downtrending diagonal trend line. If we move to a 4-hour chart, we'll get a better view at that trend line. We can see we have 3 rejections, 1, 2, and this is our 3rd rejection, and therefore this is the key level we do need to break above for the charts to flip bullish again, right? We are not technically bullish on the short term. On the macro, we are very bullish. On the short term, we are not quite bullish yet. We are seeing a nice little reversal develop from support, but that is not strong enough for us to be confident that we are going to see continuations up into this mid 70k region. The same validations we were looking for in our prior video are the same validations we need to see in this video. We need to see the RSI break out of this downtrend. Again, this downtrend is a representation of the fact that we've had falling momentum at the same time the price has been moving in a downward trajectory. And therefore, a break of that RSI would indicate a positive shift in momentum and suggest strength, which would push the price action over that resistance into that $67,000 region. And again, we need to break above that 67,000 region to see that continuation upwards. So for the bulls to take control on the short term, we need to see a break of that RSI. As a consequence of the break of the RSI, we will see a domino effect, which will result in the price action retesting and breaking through the downtrend, and the first target of the breakthrough of the downtrend is going to be 67,000. If we retest 67,000, it is highly likely with the positive momentum we will have as a consequence of the RSI breaking, we are going to see a continuation of 73 to 74,000, which again would be very, very, very bullish because we'll be retesting the range high, which will result in a macro continuation if we break above that level. So those are the bullish validations, and those are the bearish validations. So let's now jump over to a very small time frame and discuss what is specifically happening in the last 24 hours. So as we can see, guys, we did see a pretty nasty correction over the last few days. We have pushed back into this green area. This green area is going to be our deviation low, which is again the range between our low range of support at 59.8 and our sell side liquidity. This is going to be an area of resistance now, as again, prior support turns into resistance. So we are now retesting this area as a point of resistance. And therefore, at the point of resistance, we do expect resistance to hold as resistance while momentum is not yet positive. And thus, there is a chance we do see a correction back to retest that yearly uptrend of support. Now, remember, even if we see the retest of the yearly uptrend, we do expect the yearly uptrend to act as a major area of support, and we are only bearish if we break down below that. So we'll come back and discuss that again later in the video. On the short term, we are seeing an inability to push higher over here. We're seeing a lot of hourly candles attempting to push higher. Not too much luck on the short term at the moment. We do have our short term uptrend developed by this trend line. We would like to hold above this level to facilitate a continuation through that resistance. If we do see a breakdown of that level, then we could see that downward move continue and initiate. Until then, we are going to be apexing or chopping, should I say, between the uptrending support on the short term And again, the horizontal resistance on the higher time frame. So again, depending on what happens over here, if we bounce on a level, we could continue upwards. If we do continue upwards, we are moving into that range of resistance. And again, if we break down in the short term, we could see a correction down. So although we have seen a small little rally in the last 24 hours, this is not going to be enough of an indication to tell us that the bulls are fully back in control. We have established some support. We have bounced from support. We are still respecting the high time frame levels. We still have macro support below us. We are still in a macro uptrend. The charts are still macro bullish, but on the short term, not quite there yet to fully suggest we are going to continue upwards. We do have our validation points, and we've outlined exactly what you should be watching out for on the short term. Let's move over to the macro charts now. So again, guys, if we want to keep everything very simple, there's a few ways we look at complex, simple. If we want to keep it very simple, there is one very simple method we can use to identify whether or not the cryptocurrency market as a whole is in the bullish territory or in the bearish territory, and that is simply looking at the total market cap. This is going to be our neckline of yearly resistance, okay? Now, this neckline of yearly resistance is also the bullish parabolic trigger, okay? Meaning above this level, the parabolic phase shall start for cryptocurrency, Bitcoin, altcoins, a whole 9 yards above this level. Now, with a bullish trigger, a breakdown below a bullish trigger actually sends us into a high time frame downtrend. So we have a tight invalidation below here. The invalidation should be a weekly candle below for high time frame confirmation. Of course, a monthly candle below would be very, very dangerous as according to historical price action data. So a loss of this high time frame level on the total would suggest that the bears have regained high time frame strength and will likely push the price action much lower, potentially to this $1.6 trillion level. But again, guys, while we remain above here, we are expecting support to be closer than expected, and we are expecting macro continuations to develop sooner than expected. If we do break down below this level, that is when we expect a high time frame downtrend to continue. Now, a lot of people are thinking, Whale, are we macro bearish? What has happened? This short-term correction feels worse than the FTX crash. People are really freaking out. And the best thing to do is to look at data, right? Look at what we have seen in the past. As of right now, the markets are objectively macro bullish, okay? From a technical, from a structural, from an economic perspective, we are seeing the pieces fall in place that could develop into a parabolic phase, whether that be potential lowering interest rates, whether that be historical patterns repeating, whether or not be key high time frame structural levels of support, as per the total and as per the yearly uptrend of Bitcoin holding and being established. We are facilitating a possibility for this parabolic phase. So let's go ahead and take a look at a particular pattern we identified a few weeks ago that has been holding true to history. So if we look at the bull runs in the past, we have noticed at and around the time that Bitcoin retests the prior all-time high levels, we generally see 3 points of validation. We see point number one, which is the price on the price cycle indicator, the red, the lower band, breaks into the Ichimoku cloud. That's tick number one. Tick number two, at this time, the price action remains above the mid lines, okay? The green and yellow lines of the price cycle indicator, short low and high low, short long and high short moving average. This is going to be our moving average at EMA. We remain above this level. And of course, our upper band of the price cycle, we can see we are retesting. So we have 3 points of validation. After that, we end up going to that parabolic phase. If we look at the other cycle, which is going to be our 2017 cycle, again, at around the same time, the price action is retesting the price cycle upper band. We have got the price action above, okay, the mid lines of the price cycle indicator, which is our second tick. Our first tick was the retest, and our third tick is we've got the lower band breaking into the Ichimoku cloud. Again, the exact same 3 points we saw in the first cycle. If we go to our next cycle, our prior cycle, our 2021 cycle, again, price cycle lower band breaking into the Ichimoku cloud. Price action sitting above the mid bands. And at the same time we are retesting the prior all-time high, or around about the same time, we are also rejecting and retesting from the upper band of the price cycle. The same 3 validations. Now moving over to the next cycle, which is the current cycle, we can see once again Ichimoku cloud have been broken in by the price cycle lower band. Price action retesting the upper band as we retest the prior all-time high. And the price action sits above the midlines of the pi cycle indicator. All three validation points. So as we can see based on historical data, we are actually seeing the exact same structural and most importantly, the exact same technical standpoint in terms of high time frame strength, because all of this is a reflection of the high time frame strength that we saw in prior cycles at this particular point in time. The price of the asset is not always a direct reflection of the strength of the asset. So we're looking at the technicals as a reflection of this strength. We can see the strength was at the same point in time, or should I say was at the same point as where it is in prior cycles at the same point in time where Bitcoin is right now. So we're seeing history potentially repeat itself. Now there is an invalidation of this theory. If we do see a weekly candle close underneath 55k, okay, 55k, which again, I told you to remember what 55k was. If you did remember what 55k was, 55k is that yearly long uptrend, okay? If we close a weekly below 55k, which is a yearly long uptrend, we will, as a consequence, close a weekly underneath the midline of the pi cycle indicator. And what we have seen in the past is every time we close a candle under the midline of the pi cycle indicator, that is when we enter the bear market. So that could be a bear market trigger point. Historically, once we see that pi cycle indicator break into the Ichimoku cloud, we remain above the midlines the entire bull market, the entire way up. We've seen that, and therefore we should be expecting the price action to remain above the midlines the entire way up. We saw that once, we saw that twice, we saw that 3 times over here. Again, breaking, price action remains above the midlines, and we saw it in the prior cycle. 4 points of validation. There is confluence everywhere. Everywhere you look, there is confluence here, 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 here. Everything is suggesting history is potentially repeating itself. And the worst thing you can do is get flushed out before the validations of the bear market start. We are not yet in a macro downtrend. We are not yet macro bearish. There is no reason to expect to go into those positions while we have so much bullish confluence going on. Only when those levels validate, only when the bullish case scenario invalidates, will I be selling off my positions. Thank you for watching. Catch you guys in the next video. Have a fantastic weekend. See you on Sunday. Have a good day. Bye.